right, welcome everybody to another episode of Capitalize on Retirement. We have today on hand a pretty controversial subject, if you will. Today we're going to talk about, do I actually need an advisor? And that answer may be different than what you might expect from us, so truth may kind of surprise you, but there's very good reasons to hire an advisor. There's reasons people choose not to hire an advisor, and that may make sense. There's also reasons that you shouldn't go at it alone if you truly care about your future. So today, that's what we're going to talk about. Anything you want to add to that?
Yeah, I mean, I don't know if you get this, but I get this question all the time. Mm-hmm. You know, some people really enjoy doing it themselves, and so they ask us, "Hey, why would I use an advisor? Why wouldn't I just do it myself?" And so I think sometimes there's reasons that you would do it yourself, and there's reasons where you might need an advisor. So that's kind of what we want to focus on today.
No, I agree. I mean, it's a question that everybody, probably everybody goes through that at some point in their life, right? At some point in your life where you're going to say, do I actually need an advisor, or can I do it myself? And if you can, do you want to do it yourself? So we're going to talk about the first portion of today. We're going to talk about why people don't hire an advisor. And I think one of the real common ones, Brandon will attest to this, and we'll talk about it. I don't want to pay fees, right? Yes, it is cheaper to not use an advisor.
Yeah. It's cheaper to do a lot of things yourself, right? Yeah. I mean, you know, when I built my house, I think about this all the time, you know, and I actually know somebody who's going to be their own general contractor. And it's like, yeah, could I save some money? Yes, but you're basically paying to make sure that you're not making those mistakes along the way. Because a lot of the times, you know, paying an advisor could be expensive, but it's all relative to what you're trying to accomplish. And if you're trying to build a house and you don't hire a general contractor to make sure that you're doing that the right way and everything's set up and people are showing up at the right time, and you're just paying because that general contractor knows they've made mistakes before, or they've had clients make mistakes before, and you're paying so that you don't make those mistakes. Because when you're 30 years old, like us, we can make a couple of mistakes and we can recover. But when you're 50 or 55, 60 years old getting ready to retire, in my opinion, it's much harder to recover from that mistake.
No, I totally agree. I mean, on that fee subject, price is what you pay, value is what you get.
Yeah.
I don't want to build my house myself. I pay people for changing my oil in my car. Those are all things. You know, YouTube nowadays, we can learn a lot, but I want an expert.
But with that, I do agree. I mean, you know, if your hobby is financial planning, mm-hmm. and you know you can go out and buy an index, you know, that's great. But there are a lot of downsides to that, and I know that's what we're going to talk about. Is if you just go and buy and hold the index, yes, that can be great. You can make money over time, but you're not focused on the tax side of things. So there's a lot of positives, but there's also some negatives with that as well. But sure, you could do it yourself and save some fees.
Yeah, and my thing, I think we've talked about this before, if you're younger and you're kind of just getting started out and you don't really have any tax questions or things like that, and you're just getting started saving, buying an index fund, there's no problem with that. And if you're not going to take any value from an advisor, like that's okay too, but we want to kind of get to, that's what we're trying to dissect today. When do you and when don't you?
Absolutely,
Another issue we hear is I've had a bad experience in the past. That's a common one. I hear that a lot, especially with the pre-retirees and retirees we deal with.
Yeah. And a lot of the times when I hear that, it's because they go to an advisor and instead of having strategy sessions or instead of actually focusing on the plan, they're just talking about investment strategies. And at the end of the day, I want to go to somebody and say, these are my goals, and I want somebody to tell me how I accomplish that. If I just go to somebody and no matter who I am or no matter what my goals are, they're telling me, hey, this is a great mutual fund or a great ETF to invest in, who really cares, right? I want this plan to solve my problems. And so if you're not working with an advisor who's focused on that, I could see how that could be, you know, or you could have a bad experience with it.
I think we've always taken the approach of giving advice rather than selling a product.
Yep.
Right? Like people aren't coming in here, we're not analyzing their statements, oh, this position's bad and this position is so much better. Right. It's what are your goals, what are your needs?
Yep.
Right? Goal, strategies, goals. How are we going to fix the problems that you have? that's where an advisor could come in. If you feel like you don't have any problems, and maybe you need somebody to look under the hood.
And I know you say this all the time. We're basically just educating.
Yeah.
Like, people come in and we're educating them on their situation and what they could do better to solve some of the goals they have. It's not necessarily selling anything. It's just giving advice and giving knowledge. So if you have an advisor who is just saying, hey, we can invest in a certain mutual fund or ETF, some are, and maybe you have a direct indexing strategy, which is complex, but you buy the stocks that make up the index. You could get some tax efficiency, possibly some better performance, depending on the year. But, if you're just chasing returns, that's not the way to provide true value as a financial planner anymore.
And I think even on that past experience one, like, a real fiduciary is going to do what we talked about. They're going to find out your goals, what you need, and they're going to give you recommendations based on that, not just offer you a product, because that's not what our job is. This mutual fund isn't going to solve all of your problems. Having a plan is.
Yep.
The other common one, we don't hear this a ton, but I can just use online tools, and I think we all know we have technology. We use a ton of it, and technology is amazing, and it's very beneficial to this retirement planning landscape.
Yeah.
Utilized here every day, but it is not the end-all, be-all to your retirement plan.
Definitely. It's like ChatGPT. I mean, everybody's using AI tools anymore, and I know I look up stuff on ChatGPT almost every day, but I have to fact check that because it's not always accurate. And also, we use financial planning software, and sometimes what the financial planning software is telling us to recommend to our clients is not right for that client. And so there's some human interaction that has to be there. And if you've only done one financial plan for yourself and you haven't made those mistakes yet, well, what you're paying an advisor for is to make sure, once again, you don't make those mistakes.
No, couldn't agree more. I mean, the software is only good as the person using it, right? You referenced building a house earlier. So let's say I'm digging that foundation. Well, that's great. If I go out there with a shovel, it's going to take me 10 years to do it. I don't know how to use an excavator, so I can't use that tool for it, right? So these tools are all valuable, but you have to make sure you're working with someone who knows how to use it and has, in this case, prepared retirement plans before. So, I mean, guys, those are the reasons people hesitate and don't tend to use an advisor. Some of them make sense depending on your situation, right? Not everybody does need an advisor. But as we move on to this next piece, we're going to talk about why people do hire advisors, and most of that has to be on value.
Yeah, and just one thing I want to say is, once again, like, if you really love doing it yourself and you understand all things financial planning related, you understand the markets, and not only do you want to go to your real job and perform there, but you also want to watch the markets and make sure you're doing everything there and constantly rebalancing and looking at tax strategy. That's awesome, but not everybody wants to have two jobs. So if you enjoy it, you might be able to do it yourself. If not, sometimes the mistakes that you're going to make are going to cost you more than the fees you're going to pay an advisor. So,
totally agree. I mean, that's one of the bullet points I was going to talk about. So it's time freedom, right? At a certain point, people don't want more financial work, right? Yeah. They want to offload this to an expert who can help guide them. And we've talked about goals, and that's what this is based on. I'm going to give you my goals, and you tell me how to I'm going to give you my problems, you tell me how to fix them. Or I'm going to tell you what I want to happen, and you need to help me create that. So at some point, people don't want to watch the stock market every single day. They don't want to have to read the tax code and understand the new tax bills. They want somebody that's going to be able to help them. I know when I bring my car in for an inspection, if I need tires, I want them to tell me I need tires. If I need brakes, I want them to tell me I need the brakes. I don't want to go lift my car up, look under the hood. I don't know what's wrong.
Nor can we,
right? Like, I need somebody to help me with that. So I think time is a big one. You have anything on that?
Yeah, I mean, in terms of, why you would hire an advisor, it's just eliminating the guesswork. We kind of already mentioned this, but once again, some of the mistakes that we've seen people make. I mean, I literally saw somebody the other day overfund their Roth IRA. So they put too much money into their Roth IRA, and they're over the income limits. So they couldn't even put money into a Roth IRA. They had to do a backdoor Roth IRA. And it's just, there's all these little things that you have to know before you make those decisions. So just some of those mistakes could be very costly if you do it the wrong way.
No, I agree. And I mean, I think you mentioned this earlier, like when you're 30, you can afford some mistakes. You make some poor decisions in the market. You can recover from that. You have enough time. But when you're that retiree age or you know, you're getting ready to retire, you're retired, you got to take the guesswork out of this, right? Like this is your life savings. This is your asset. This is what you have to live on for the rest of your life. This is the money that will be inherited by your children, grandchildren one day. Like at that point in time, you have to work with someone who really understands the tax code, who understands how to draft up an income plan and make sure it works. So you can't really be guessing at that point anymore. It doesn't become, it's not really a hobby anymore.
No, definitely not, especially if you're making mistakes. I would say the other reason that you would hire a financial advisor is we call ourselves a coach all the time, right? And so, well, what does a coach do? They make sure you don't make bad decisions, and they coach you to make sure you're not making those wrong decisions. So I think this is something that we do every day, and there's a lot of studies that came out. I actually have a stat here. Investors hurt their own returns when they manage their money by 3 to 6% on average per year. And it's because it's emotional. If we can talk you off that ledge, so to speak, when the markets are going up and down and fluctuating, we can potentially save investors 3 to 6% on average. So that's a huge savings over a long period of time.
I couldn't agree more. I mean, we saw it this year with, you know, April 8th, April 9th, Liberation Day. When the tariffs were enacted, the market dropped. I think it was like 15% in 2 days. Don't quote me on that, but it was a big number over a 2-day period. And the phones were ringing off the hook, and that's okay. That's what we're here for, right? Our job is to do the coaching, provide that invisible value that we need to provide to make sure people aren't making poor decisions, because I know a lot of people did. And the next day, I believe it was April 10th. Again, don't quote me on that, but it was up 9%. If you sell at the bottom, you miss out on 9% coming back. I mean, you and I, we talk about it all the time. Like, we have one of our advisors help us with ours because we're not emotionally tied to it. It's
That's
different.
Exactly right. I remember when I first got into this industry, and I thought to myself, I'm too emotional with my own money. And that's why, you're right. We have somebody else make sure that we're also getting coached so we don't get out of the market. I mean, it's emotional, right? We're all human.
You pay for that, but when it's yours, you're more emotional. I'm more emotional with my money than you are with my money, and vice versa, right?
Definitely. I guess one of the other reasons that we talk about this a lot would be taxes, right? So the tax code is complex. If you read through it, there's hundreds of pages. You could kind of, take a month and still not get through it. But this is an area where I think we provide the most value to a lot of our clients.
I couldn't agree more. If you are paying an advisor to manage your wealth, right? Wealth management, taxes need to be involved. And when we talk about that, we're not necessarily, I mean, there's a million strategies. We've talked about them. We have direct indexing, charitable funds, Roth conversions, all these different things. But you have to be doing tax planning. It is the absolute biggest needle mover because do you know what the stock market's going to do?
I wish I did. No. I mean, nobody does.
Nobody does. We don't know, but we know what the tax code is. It is laid out in front of us. It is true. And we have control over our income. So that to us is opportunity, and we exploit that and take advantage of that every single day with the families that we serve just by understanding the tax code and knowing how to leverage that to the families that we serve to their favor.
And you said we control our income. And just to kind of clarify that, you mentioned when the market went down in the beginning of the year, in the beginning of 2025. Well, a lot of our clients weren't panicking because we were calling them and saying, hey, let's do a Roth conversion. But if you don't have a tax plan, how do you know how much you can convert? And so those are the things that we really help our clients with. And it's not just Roth conversions. It's also capital gains management. I mean, I know that's something we talk about, and we don't even put a ton of emphasis on it. We probably should. But, stocks go down, you realize some of those losses. you know, I remember during, I think, the pandemic, one of the big things that we did is we realized, I think we had Home Depot stock or Lowe's stock, and Home Depot went down in value, and we realized a lot of losses for our investors, but we bought back Lowe's. So when Lowe's recovered, they've still made back their money, but they realized that loss. So those are just things that I think are very important, and you have to look at both sides of it.
It's managing your capital gain distributions, which are your 1099 DIVs. It's a Roth conversion analogy. It's just, if you're paying an advisor and they are not talking to you about taxes, again, that's like me taking my car to the shop and, hey, I need brakes, but they forget to tell me, like, I'm paying you to do your job. You have to share these things with me. It's value. You got to give me that
They
value.
look at everything other than brakes.
I mean,
You probably wouldn't want to go there.
No, that's the thing.
Yeah, and I know we talk about taxes a lot, but I think it's very important because anybody can help you get set up with an investment portfolio.
We're all fishing from the same basket there. I mean, we really are.
Yeah, and everybody has their own strategies, but as long as you're set up the right way and you have different asset classes and you're diversified, you'll probably do pretty well.
Yeah.
Right? But if you're not looking at this thing as a whole with taxes, that's the true value, in my opinion.
It's the needle mover. There's no doubt about it. That's what we've gotten extremely, extremely good at. We get the 2 CPAs here, so that's a big one. And then even just to kind of finish it off, it's the coordination of everything, right? Like, people who come to see us or visit us for the first time, or clients who have been with us for a while and we're doing our strategy sessions, we're not just talking about what stocks, bonds, mutual funds they own or how their account's performing, because we control none of that. No. We really don't. I mean, we need to be coordinating the entire thing from income, investments, tax, healthcare, and estate planning.
Yeah. Yeah, and I mean, just to dive a little deeper, like on the income strategy, just to get more granular, like, we're focusing not just on where is their income going to come from with their investments, but also how do we maximize Social Security? What pension decision do we make? When we go to the investment piece, we have to talk about how do we set ourselves up and diversify, but how do we protect some of our money now? The tax side, we kind of mentioned all that stuff there. The healthcare side, it's not just Medicare, it's long-term care. And just making sure we're not making the wrong decisions there. And then finally, estate planning, wills, trusts, what documents do we actually need and how do we best utilize these things? So, yeah, I agree. I think it's coordinating all of these things together. We're the quarterback, and we're managing all of that. So we see people come in all the time where they have an estate plan, but they didn't fund it. They don't even have the trust funded.
Oh, that's very common.
Yeah. So it's on the advisor, in my opinion, to quarterback that for the families that we serve.
Well, speaking of that, though, we teach hundreds of workshops a year, and we do 15-minute phone calls after our workshops that are complimentary. And we always hear, like, well, my advisor told me to go to this workshop because he doesn't do Social Security plan. I'm like, Social Security is most people's only guaranteed income stream that's spousal protected, lasts forever, and you're not talking about that, but you do retirement planning. I mean, that doesn't make much sense. It's almost impossible. Same thing with taxes out here. Well, my CPA handles my taxes, and that's tax preparation. Let's talk about tax planning, and then we'll kind of wrap this up, because I think when you're coordinating everything, preparation versus planning, totally different. We'll do another podcast with Brett, and we'll talk about that.
Yeah, definitely. And I think the one thing that maybe we don't talk about on the podcast at least enough of is healthcare. Just to kind of mention long-term care, I think that's, other than running out of money, I think that's maybe Americans' second or third biggest fear in retirement. So just having a plan for long-term care. There's a lot of different things that you could do. You could plan through trust planning. You could have a hybrid life insurance policy that we talk about a lot, where you're not wasting those premium dollars, right? It's life insurance, so somebody's getting the money on the back end, whether it's you for long-term care or your beneficiaries as a tax-free death benefit. And so that's something that we don't really focus on a ton on the podcast, but it is, in my opinion, pretty important.
It's something we address with every person we work with, because you got to make sure that everything works together, right? Like, a lot of people do want to talk about taxes, especially that when they talk to us, because that's a big piece of what we talk about.
Yeah.
But we always tell them, hey, if your income plan doesn't support you, And that doesn't work. You could have the best tax plan in the world, but you run out of money, you got an issue. So they all build on each other. Same thing with healthcare. We could put a long-term care plan in place, and the one thing I hear it, I know you hear it, all of our advisors hear it, it's expensive. It does cost money to insure. That's why you have to make sure your account is structured so you could pay for these things. If you have to debate of, well, I can't go out to dinner with my family on Friday night because I got to pay for this, then we're probably not going to buy it. But there's ways where and we do it all the time, we could use your assets to pay for that insurance.
Yeah. Some of our clients aren't going to use, they don't need all of their money to use for income. So just leveraging what they have is very valuable. And like you said, I mean, if you're not coordinating all of these things together, it could crack the other pieces of the puzzle. So, you know, one of the spouses goes into a nursing home and spends down all the assets. What happens to the surviving spouse?
Yep.
So it's just all those things, and coordinating it is very important.
I think that's why, you know, we're talking about why you need an advisor. And I think if you need an advisor, or if you have an advisor, you choose to use an advisor, you want to make sure that they are covering all these things.
Yeah.
Right? Like you mentioned, some of the families that we serve, they don't need all of their assets.
Yeah.
Well, you don't know that. If you're doing it yourself, you probably don't have a good indicator of that where, you know, we do this so often. It's what we do that we know.
Definitely. So, I mean, I just think you know, let's just talk why it pays to have an advisor. And I'll also talk about maybe why you wouldn't want to pay. So just to kind of wrap it up, I think you're not really paying an advisor for returns anymore. You're paying to avoid mistakes. Like, that's the number one thing that I want to get across is just you're paying to avoid mistakes. We've done this. We have thousands of clients that we've helped get through to and through retirement. Well, if you're doing this yourself, you might only plan one.
Is different. If you're doing this the first time, if you're doing your first Roth conversion, you're figuring this out, you're practicing. Like, we're not practicing anymore. This is what we do. We know how to make sure we're not making mistakes. We're not going above thresholds. And if we are, you're at least going to know you are, right? We could have that conversation.
Yeah.
We're going to know what your RMDs are going to be, what your capital gain distributions are. We're going to know that you have income to live on. I mean, I agree with you. If you're paying someone, you're paying to not make mistakes. You're paying to optimize your situation. Paying for returns is kind of the old way. That's what you did. You know,
one company's going to do better than another company this year, and vice versa. And it's just, if you put it into the right categories and you're diversified, and you know, that's what's going to make you a good investor over time. It's not necessarily I pick the best funds because I'm the best advisor and I know the market's the best.
Yep. If I'm going to have a DIY project or something like that, it's going to be a low-risk project.
Yeah.
Like, I might paint my bedroom.
Right.
Right? And
you can have somebody come and repaint it. You'll be fine.
Yeah, that's the thing. I spill paint on the carpet or the floor. Okay. I'm not going to frame my house. I'm not going to, you know, if I'm doing something like that, it's going to be a low risk item.
Yep. And it's just, we talked about building a house. It's like, if I build a house, I would probably start with the foundation, but if I don't and I start with the walls and I forget the foundation, well, that's a problem. And if I've never done it before, you know, that may be the case. And, you know, you do that with your money and you could cause a lot of problems.
Oh, it's a big issue. And I think, you know, as we talk about this, I think the main thing is a plan beats a portfolio every single time. Having a strategy and a plan that is specific to your goals and needs and the outcomes that you want.
Yeah.
Because none of us control what the market's going to do. And when it comes to investments, I say it all the time. Most people aren't going to want to hear this, especially other advisors, but the investment part of what we do is the easy part.
Yeah.
I mean, that is by far the easiest piece of what we're doing. We're going to buy a really good strategy. We're going to be well diversified, right? And we're going to enjoy the ride.
Definitely. And just to give, I'll just give one more thing before we wrap up, but I'll give a client example. I mean, just a little thing. Like, I had a client who always did it themselves. Now they got to retirement, they came to one of our workshops, and they decided, yeah, you know what, I don't know everything, I'm going to hire an advisor. And just last week, he's buying a vacation home in Florida. And so he was going to take money out of his IRA. He was going to pay 24% in tax to do that. And then in the meantime, he was doing that because he's selling his current house and he wasn't going to have the money in time. So I said, we could borrow from your brokerage account. We could set it up so you borrow from your brokerage account. You don't sell any investments. And that way you're not paying the taxes and all these, 24% in tax to do so. You take money out, your money still continues to grow over time, and you use that to buy the house. And then you can pay that off once you sell your current home. So just little things like that. I mean, we saved him a ton of tax dollars. We saved him a lot of growth over time. So those are just things. That's a little thing, but we see that all the time.
It's a little thing with a big impact. I mean, I just saw one the other day, and this person had an advisor, and it was an IRA account, and the spouse was listed as the beneficiary.
Yeah.
The gentleman had 2 children, and they were not on there as contingents. And I'm like, this is a little thing, and we have to be very detailed in our business because it's people's money. It's their life savings.
Yeah.
And I know, control what we can control, right? We've heard that for years. Control what you can control. And being detail-oriented is one of those things that we can control. We don't control the stock market, but you have to make sure you're doing things the right way. And
definitely,
I think that's what we do really well.
Yeah. So I think with that being said, I mean, there's a lot of reasons why I wouldn't hire an advisor, just being honest. If you're just looking for investment management and maybe you're to the point where you don't really need tax advice right now. You're 23 years old and you're just starting saving. You might not need an advisor, just being honest.
No.
Get set up the right way with the investments, but you might not need an advisor. Now, if you're 45 years old and or you're 60 years old or 65 and you have a pile of money saved and you have tax problems and you need all these things put together for you, then that's where having an advisor might really make sense.
It can move the needle. I think having the right advisor, having someone who does holistic planning and kind of can see every angle. But if you are a do-it-yourselfer, you enjoy it, it is a hobby, you don't really care about moving the needle, and you just want to buy the mutual fund or the stock, then there's no issue with that. It's just if you're looking to really optimize, you need an expert who can come in and help you, and any advisor who is providing value will absolutely justify what you pay them.
Yeah, for sure. And we said it a million times, but you don't really know what value you're getting until you make those mistakes.
Yeah.
And sometimes it costs you way more than the fees are going to cost you. So
price is what you pay, value is what you get. Yeah. So, guys, we're going to wrap this up. We appreciate you hanging with us for another episode of this. We really enjoyed doing this one. Very controversial topic. So anything you want to add to finish it off?
That's it. Just last thing, if you're going to hire an advisor, make sure you are getting that value.
Oh, yeah.
So, if you're paying 1% or some of these other firms, they're charging 1.5%. Well, what are you getting for that? Sometimes it's worth it, sometimes it's not. So just constantly look at the value that you're receiving.
And ask the question, too. What am I paying? What value am I getting? There's nothing wrong with that.
Yeah.
That's it. Thank you.